So obviously the big picture for Asia as much as anywhere else and for all of the emerging markets is the question of how bad and how far will inflation be. So give us your sense of what we're grappling with in the emerging markets. And let's start off with the Asian situation. I guess start off with China being the biggest of them out there. Give me your sense of what we're looking at in China, because that's kind of the one place that's immune to a certain extent to what we're seeing elsewhere.
China has been different, and that's because the economic activity suffered from significant lockdowns in Shanghai and elsewhere. That's kept demand and inflation pressure lower. So in China, we're actually running just over 2% inflation, below the target of 3%, and that gives authorities room to do more on policy easing if they so choose. Pretty different situation to what we're seeing in a lot of the rest of the region, which looks more like it's lagging the developed markets and maybe in LATAM and CEMEA, you've seen already big surges in inflation. You're starting to see that show through in a lot of parts of Asia now, and most central banks now moving into hiking mode.
How do you think Beijing is looking at the value of the yuan right now? I mean, you've got the dollar obviously having seen an enormous rise and a flight to safety, and then the yen plunging right now, which should be probably causing them some kind of concern.
Well, I think there are two things that are probably on their minds. One, the export environment is going to become more challenging. For the second half of 2020 and 2021, China really benefited. The rest of the world needed lots of goods, in many cases was locked down. China was able to provide those goods because its supply side was pretty open. So China had an export boom. Now the rest of the world is reopening, shifting back to services, and growth is slowing. None of those things are good for Chinese exports. So in that kind of environment, a little bit weaker currency is probably appealing to the authorities. That said, the memories of 2015-16, when weaker currency led to significant capital outflows and financial volatility, it may still be in their minds. And they've shown some reluctance to have a rapid depreciation. So I think on balance, the Chinese authorities would probably prefer a slightly weaker currency, particularly given, as you mentioned, the yen and it has reached new lows. But at the same time, I think they'd like that to happen in a pretty gradual way and not in a straight line.